What it do, fam? Quick one for tonight. You're watching Sekkider, and this is what we're watching for the week of January 25th to the 29th. Today we'll be talking about two leisure companies that you may just not know about yet. Before we do so, this is just a reminder that these episodes are meant mainly to introduce some of the less well-known companies from Korea's stock market to the adventurous investors out there. The focus of this channel is education. It's not meant to replace any professional, financial, or legal advice. Consider this an intro. Whether these companies are for you, well, you'll have to do more research and look into that for yourself. Now let's get to it. With vaccinations on the horizon, but no general guarantee that the international travel will pick back up in earnest in the short term, intranational travel could very well be the first source of recovery for the tourism industry. If you suspect this to be the case, then it may not be too late to get in on COVID-specific recovery stocks, particularly since these ones may be a bit off the radar for some investors who are getting sucked into trading on the volatility. The first company I want to talk about today is Kangwon Land. Kangwon Land is a tourism and leisure company that runs a variety of tourist attractions and accommodations, such as a hotel, a casino, condos, and a water park. All of these can be found at the Hyundai Ski and Golf Resort, located on a mountainside in Jeongseong-gun, which is in Kangwon-do, obviously, Kangwon Land. Now, looking at current basic fundamentals for either of these companies would be kind of fruitless, since we know that the tourism industry caught a swift kick in the fire eggs for the bulk of 2020. What we can do, however, is peep how much of a drop-off they saw and what they did in an attempt to reduce the damage over the course of the year. Opening up some of the IR material from Q3 2020, we see some numbers that we expect to see, like year-on-year losses on sales, which were down 81.1% year-on-year. A good sign to see is that in the wake of the virus, they cut their SG&A, which is the cost that they incur with regards to sales and administrative expenses. Ultimately, SG&A expenses are the easiest to cut, as they don't often immediately affect the production or distribution of a product or service. Another thing to see is that they drastically cut back on their services, spending 38.7% less on COGS, or the cost of goods sold, when you compare it to Q3 of 2019. Now, you can look into all of their IR information by clicking through the link in the description box below, but I'ma summarize a few takeaways that I noticed in their third quarter report. For one thing, the number of visitors dropped year-on-year from 784.8 thousand people in Q3 2019 to only 40,000 people in the same quarter of last year. That's a reduction of 94.5%. Comparatively, their sales only reduced by 81.1%, and that's likely on the back of an increase to their golf revenues and the cutting of new attraction development spending, which obviously you want to do. If you're short on money, you don't spend more money on things that you can put off till later. But what's more important for our thesis of revitalized intranational travel is that the 94.9% drop in attendance came mostly from a drop in domestic rather than foreign visitors. Now, foreign visitors did drop 98.6% from 8,475 visitors to 122, but this number is actually quite negligible when compared to the hundreds of thousands of domestic visitors that they lost in that same time frame. If we see a wave of newly vaccinated but domestically trapped people trying to find somewhere to go once it's safe again, it may be a safe bet to assume that Haiwon Resort may be a key destination. One last note, Kangwon Land is majority owned by public sector entities deeply invested in local development, such as the Korea Mine Reclamation Corp, Jeongseon County, where it's located, the Kangwon-do Development Corp, Samcheok City, Taebaek City, Kangwon Province, and Yeongwol County. They also have an employee benefit trust and are owned in part by the National Pension Service. I don't know if that matters to you, but I like to know when companies are invested in their communities. It makes me feel better about putting my money towards them. Alright, now the next company I want to talk about before we go is Hotel Shilla. Hotel Shilla is a different type of travel, hotel, and leisure business, as their holdings are both nationwide and international. The Shilla has a wide range of duty-free stores across Asia, with retail holdings in Phuket, Tokyo, Macau, Changi Airport in Singapore, and Cheklapkok Airport in Hong Kong. On top of this, they own the Seoul and Jeju hotels, as well as many Shilla hotels around Korea, Shilla Monogram in Da Nang, and Jinji Lake Hotel in Suzhou, China. Thus, their hotel business is very widespread. Now, looking at their DFS, their duty-free stores, we can probably assume that the worldwide halt of international travel, especially within Asia, led to a lot less profitable travel retail locations. Still, Shilla was able to buoy their losses and were only down 40% year-on-year in revenue as of Q3 2020. While their operating profits turned heavily to a loss, Shilla Hotel was able to narrow the OP loss margin from 63.4 billion won to 14.2 billion won between Q2 and Q3. Now, although they do have strong potential to turn a profit once international travel picks back up in earnest, it would be irresponsible to not mention that their debt to equity stands at 344%, and they have an EBITDA to sales of 4.8%. We're going to talk about this last ratio in a future episode, but their third quarter fundamentals were predictably not very pretty. Finally, one more thing to note about Shilla Hotel is that their stock price may no longer be trading at a discount since it has recovered and surpassed where it was at this point of last year. Still, you may want to look into the company and see if it has a place in your portfolio. Alright, I told you this would be shorter than usual. I hope you found this helpful and that we've given you something to think about when considering what industries you'd like to target in the future. If it did help, please share this with your friends, like and subscribe, and click on the little bell so that you know what we're dropping as the year goes on. Take it easy, protect yourself in this record-setting market we're in, and let me know what kind of trends you're looking into right now in the comment section below. Alright, take it easy. Peace.